Hi, this is Peter Parker. Welcome back to our video blog. And coming into 2014, I want to answer a question that we get from a lot of folks when they contact us about buying a home. They ask, why is it important, that I get pre-approved, and what do I need to do to get pre-approved? And this is a really important topic coming into 2014 because lender guidelines are changing, and they're going to want a little bit more information up front than they have in the past. Generally speaking, your last two tax returns and your last two bank statements, because part of the sort of financial reform and just sort of tightening up on the lending industry to try to make sure that people don't end up in bad mortgages or in a situation that becomes unworkable for them is lenders are actually potentially going to be liable for people who end up in default in a way that they weren't before. So all that aside, for people that are serious about buying a home, it's always been important to go get pre-approved for a variety of reasons. Number one, it does take a little bit of time. That the mortgage lender that we work with and recommend honestly can usually get you pre-approved same day, sometimes within just a few hours. But it's always good to have that taken care of up front because, for example, you might have items on your credit report that are going to be derogatory, and sometimes they're not even correct. So if we just have the lender have a chance to take a look at that, he can correct those mistakes, improve your score, which can be a big help to you in the lending process. Another factor is most buyers want to have a very clear picture of what their monthly payment is going to be for a given purchase price. And really the only way to get an accurate number for that is to take a careful look at your current income and your current expenses, and based on that we can tell you exactly what your mortgage payment will be at today's interest rates for a given purchase price. And then based on that you can decide if you feel like you can afford to go a little bit higher for the right home that really suits what you want, or maybe you have to scale it back to keep your payment at a level, whichever is more important to you. Last but not least, once you have all that information in hand, now if you do find a house that you like, you're ready to make an offer, because in our fast-moving, very competitive market, you really don't want to be in the position of, oh, I've found the perfect home, now all I have to do is go get pre-approved, and that might take, as I say, at least a few hours, maybe a day. If it's late in the day, it goes into the next day. And honestly, the difference of a few hours or a day can mean the difference between getting the home you want and missing out because you just weren't prepared while others were making offers in front of you. Last but not least, with the mortgage lender that we use, we're able to, in most cases, get people from start to finish in their borrowing process and basically complete the purchase in half the time, or sometimes even less than half the time, that nearly all other lenders in our market need. And based on that, we can look more attractive to sellers of homes. And we've had at least 6 or 8 people in 2013 tell us that that was a big reason why our client's offer got accepted, because the speed that we could close within and the amount of control that we had over the process and how straightforward and clear-cut everything was with our offer was very attractive to sellers. And we've even had people get their offers accepted at prices lower than other buyers had offered for that reason. So it's not going to cost you any money, it's not going to put you in any position of being obligated, and it's going to give you several advantages which can really make a difference in getting the home you want at the best possible price. If you have any other questions, we're always happy to help. You can call us, text me, email us, and we'll hope you join us again for our next installment on our video blog.